Good morning, everybody. Can everyone hear me okay? Can you just let me know in the chat if you can hear me?
Yes, I can hear you.
Cool. Thank you. All right, we might get started. Good morning, everybody. Thank you for joining us this morning for this important webinar. Just to let everyone know, we are recording this session and we will send out a link to all members in the coming days. We will also send out a copy of the slides as well, just in case you haven't, you have to leave or anything like that. You will get a copy of it afterwards. My name is Summer and I'm one of the Member Services and Communications Coordinators for MPAQ, and today I will be moderating the session. So during today's session, we're going to hear from Penny, who's the MPAQ Executive Director, who's going to give us just a quick update about her work with the government about COVID-19. And then following that, we'll have our main discussion, which is with the team from Xact Accounting. And they'll be talking about managing your business's falling revenue, as well as all the government assistance options that are available to your business. And obviously at the end and throughout, we're going to have the opportunity for everybody to ask any questions that they have. So you can pop those into the chat, which most of you have already found. If you haven't yet, it's on the right-hand side of the screen there. You can submit a question just through to everybody, or you can, down the bottom, you can select to just send it privately to admin, which is just me. If you do want to send it as a private message, that's fine. That's about it from me. I'm going to hand over to Penny. So Penny, whenever you're ready.
Good morning. Thank you, Summer. Before we start, I just want to acknowledge Summer. She has been doing such an amazing job at running all of these webinars for members. So thank you, Summer, for all your work. I'm just going to give you just a brief update this morning of some of the work that we've been doing with the government. And if anyone has any other comments or anything, or any other areas that they feel that we should be advocating for, if you can just note them in the chat, and then happy to take them on board. Or if you've got any questions, let us know, and I'll try and answer them for you. All right, so firstly, I just wanted to talk specifically around the government support. So obviously, Mick from Xact Accounting is going to talk more about the funding opportunities available, but I just wanted to touch on a couple. Obviously, the wage subsidy available for apprentices is only available for those businesses with less than 20 employees. We've had a number of members that have contacted us and said that unfortunately, well, they have more than 20 employees and they really want to be eligible for the subsidy. In particular, one of our members has more than 20 apprentices and he would like to be eligible for the subsidy as well. So I just wanted to advise that we are doing some work. We're talking with our small business champion here in Queensland, Marie Adshed, and also the minister and the department themselves, just to see whether we can do anything for that area. Also for those businesses, having some more support for those businesses who are either in partnerships or family trusts as well. Moving on to more of QBCC and government perspective, it's in relation to industry essentials. So we've been working hard to make sure that plumbing and gas fitting remain an essential service if we were going into a lockdown period. At this stage, we are still an essential service. The whole of the building and construction industry is defined as essential. And so we're going to be continuing to do the work that we do. Obviously, we need to be mindful of the social distancing rules that do apply when you're going to people's homes and also when you're working on building and construction sites. We don't want to give anybody any suggestions that we're not following the right rules and therefore trying to shut down building construction as an essential service. We're also advocating, obviously, for more PPE equipment, and Master Plumbers has been able to obtain some hand sanitizer and I believe gloves as well, and has been in contact or is touching base with members in relation to that have filled in the PPE request form that we sent out the other day. So they'll be in touch with you, Megan or Zoe from my office, and we'll be able to get that out to you. The biggest problem, I believe, is masks at this stage, and we've been talking to a supplier to see if we can get some masks for members real soon. We'll keep you posted on how we go. Also, one of the other ones is around a reduction in licence fees and also notifiable work or any sort of application fees at the moment. So we had our Ministerial Construction Council meeting on Wednesday this week, and the Ministerial Construction Council is a group of industry leaders, associations and unions that come together, that's run by the Minister. So these are some of the key topics that were raised at this meeting. We have another meeting with QBCC next week to talk about how we could do this, because obviously effectively they would need to make changes to their regulatory approach. So that's something that we'll be advocating. Also, I've had a couple of members provide some feedback around no auditing of notifiable works would be helpful as well during this time. And then obviously MFR as well, and in particular MFR, the minimum financial requirements for smaller businesses. And also having the ability for members to be able to cross borders, for those members that work down at Tweed, that they've got the ability to come to Queensland to perform their work as an essential worker. Also, we've had some calls from members just in regards to some consumers obviously lost their jobs during this time, and that they can't afford to perhaps pay for an essential service such as a hot water system, but obviously they want to have access to hot water. So we are talking with the government to see if there's any assistance around support for essential services such as a hot water system in homes for consumers. So then that way you could obviously get paid for the job that you do. And also we're encouraging consumers to be mindful of scammers during this time as well, because we know, in particular in the recovery efforts, that there will be people out there trying to scam, that they're not doing the right thing. Also, I just wanted to touch base around a training course. The Master Plumbers, in consultation with some of our members, have developed a training course, and it's called the COVID-19 Awareness Course, and it's been designed specifically for plumbers and gas fitters to further their knowledge about the safety requirements needed on a day-to-day basis for you to actually do your role. It's going to be a free training course available for all members and their employees as well. So it will provide learners with a broad knowledge of the physical requirements and provide practical advice for the control of COVID-19 virus. And as I mentioned, it's going to be coming very soon. We're just finalising the last little touches at the moment. If you're interested in doing the course, we are taking expressions of interest at the moment. You will also be provided with a certificate of attainment at the completion of the course, and also a logo as well. So if you want to promote that out to consumers through your social media channels that you've done this particular course, you'll also have a logo to go with that as well. I think that's all. I'm going to hand over now to Mick Renton from Xact Accounting and his team. Mick and his team do a great job working with us, and we really appreciate all the support that they provide to us and to all of our members. So I'll hand over to you now, Mick. Thank you.
Thanks, Penny. Yeah, look, it's been a pretty tough couple of weeks for everybody, and I think we're all starting to get our heads around what's in front of us now, though. And now that the initial panic and so on is over, and now's the time to really look at how you're going to manage your business with falling revenues. And of course, what government stimulus you're entitled to. The job keeper was announced this week, and I think that's going to be a significant help for everybody in the next 3 to 6 months, depending on how long this goes for. So I think we could start by saying, well, the falling revenues, is that a fact? Well, it's difficult to see how it couldn't be under the circumstances. I did read an article in the New York Times this morning, and they are predicting unemployment in the US this month in April to hit 15%. And of course, our unemployment is going to go skyrocketing. So under those circumstances, it's difficult to see how revenues couldn't fall for the plumbing industry. And certainly those project plumbers who have projects locked and loaded at the moment might be looking out into the future, thinking, well, what projects are going to be put off or stalled, and which ones are going to proceed. And in which case, there's going to be an oversupply potentially of plumbing services. Some project plumbers may rush to domestic plumbing, and in the domestic side, if we do get unemployment figures of 15%, 20, it could even be 20%. Who knows? I mean, they're talking some pretty horrendous numbers in the US. So presumably we're not far behind them. Although we've got similar lockdowns in every state, whereas in the US it differs from state to state. Either way, I think it's pretty obvious that everyone's going to have to manage their business as the revenues begin to fall, and we're going to have to take action to do that. So last week we talked about cash, and cash is king, and we talked about hoarding cash and prepping a war chest and getting ready for this. And I'm assuming most people would have done that. And I think if people that didn't see the webinar would have realised that was necessary. So now that we've all hoarded cash, or hopefully hoarded cash, and done most of those things that we should have done, well, what have we got next? So we've got potentially falling revenues. Like I said, if you're in project building, potentially you've got some projects locked in, and your revenues might be locked in as well for a period, at least until those projects are finished. If you're a domestic maintenance plumber, from what I've heard from talking with quite a number of our clients, is that they've never been busier. Not all of them, but many have said that, have given me the feedback that they've never been busier. I think that's a surge as a result of everyone going home and sitting at home and having the opportunity to do this. And certainly, there's going to be some unemployment. There's definitely going to be unemployment. We know that there already is, but there's going to be plenty of people that have got work as well, whether they be government or whatever. They're still going to be employed, and as a consequence, those people will still continue to spend. Having said that, during this period of whilst people are quite concerned about catching the virus, they may not. They'll only look at potentially just essential services. So what's next then? Well, the first thing we need to do is continue to look at cash flow. So we need to turn off the tap and the plug all leaks. So we need to look at what we can do to make sure that we're going to have enough cash to get through the other side. Because as you know, you can't run out of cash. There's no circumstances under which you can run out of cash. So we need to look at what we can do on our cash flow to plug the leaks. So what I'm suggesting is, firstly, you need to do a stock take of where you're at right now. So where's the business at right now? What projects do you have locked and loaded? What does your domestic market look like? What sort of work are you prepared to do? What's your workforce look like at the moment? Are there any older people in your workforce? Are they likely to fall ill, or is it safe for them to be out and about working at the moment? Are you prepared to send your staff into bathrooms and toilets, for example, at the moment, or are they out of bounds? So, and just generally, where are you at with the business, and what does it look like for you? Given your personal circumstances, you may be, as I said before, you may be a project plumber and be quite happy with where you're at. I spoke to a project plumber earlier in the week, and he said he's got a couple of projects still going, but when they're over, he's going to pretty much shut it down and not do any other work. Now that he's only got 2 or 3 people, so it's probably relatively easy for him to do. The bigger you are, the harder it is to play that game, particularly if you've got rent and other commitments. So you're going to just take a stock take and start thinking about what you're going to do, and how you're going to play during this period. So a financial review is another thing you need to do right now as well. And what we're suggesting, and the work we're doing for many of our clients, is, okay, well, what cash reserves do you have, and what does break even look for you, both from a cash point of view, from a profit point of view, and what debt are you accumulating? So different clients have different businesses, I should say, have different set of circumstances. But what you need now to do is sit down and say, okay, I've got X dollars in the bank, and this is going to go, this potentially could go for 6 months. And during that 6-month period, my revenues are likely to come down. So what does that look like for me? What happens if my business was to suffer a 10% clunk or a 20% clunk or a 30% clunk, or God forbid, an 80% clunk. But we've got businesses out there that have got those sort of clunks, not in this industry, but there are businesses out there that have got revenues that have just fallen completely off a cliff, and they're trying to figure out, well, how do I make it to the other side? And that's exactly what every business should be doing right now, is saying, well, we're now in April, this could go for 6 months, so 2 quarters. If I project out this, what does it look like given this level of income? What does it look like if I drop it? What does it look like? And maybe give yourself 3 or 4 scenarios to say, well, if I get to, if I have and worst case scenario, what am I going to do? And what does each month look like? And at the end of each month, how much cash have I got? How much profit or loss will I make? And am I accumulating debt, and how much debt? So, for example, if you're not paying the tax office, well, you're going to pay them one day. So how much debt are you accumulating? And if you've got rental properties, if you've got rent and you've decided you're not going to pay rent for the moment, and some businesses are, then what does that look like? What about if I turn off all of my shuttle mortgages or my asset mortgages or whatever, or turn off the bank, or don't pay certain things, mostly the government, if that's the call you've decided to make, well, then what does that look like? And when I get out the other end of this thing, what does it look like as well? So that sort of work is what everyone needs to be doing now, and they need to go from best case to worst case scenario, maybe 1 or 2 scenarios in between, so that you know you've got some sort of forecast or clarity about what it looks like. Because the worst thing to be doing right now is to just to put your head in the sand. And we've seen it with a couple of people where, you know, their industries didn't clunk down straight away for whatever reason. Different industries. I've actually seen a couple of people in plumbing go, oh, well, it all looks pretty good at the moment. But that could turn very quickly. So just prep yourself for that. I don't want to be the prophet of doom, but I also want to be somebody that's realistic and making sure that you're thinking about what may lay ahead.
But I think, Mick, sorry to jump in then, I think what we do in your business is we plan for the worst and expect the best. So I think that's the message. It's not necessarily being the doomsdayer, but it's having that realism to consider that there could be an economic lag going forward, and we need to plan for that.
Yep, absolutely. So and that's good comments. It's not about being a doomsdayer. It's about just being realistic about what's ahead. And you know, we could be in for 15, 20% unemployment. Who knows? You know, if they find a miracle cure for this or some sort of medication for those that get it, then this could go away pretty quickly. But we're not hearing anything from any government that's suggesting this thing's going to go away quickly. So the next part of that, step 3 in this process. So you've had a look at your business, taken stock of the business. You've done your financial review, and you've had a look at what your break even looks like, and so on and so forth. You see what your cash is, etc. So now then you start to squeeze your profit and loss statement. So you have a good hard look at your P&L, and you go, right, well, what if under these scenarios, what can I do? What expenses can I eliminate or reduce? So what am I going to do with my staff? Can I reduce the number of days? Can I do salary reductions? What about casual wages, contractors, permanent staff? Can I terminate staff, stand down staff? Can I reduce my wages as an owner? Myself personally, I'm not taking a wage now until the 30th of June. And because, you know, we want to protect our staff and make sure that everyone is continued to be employed. And so sometimes, you know, everyone's going to have to make a sacrifice during this, and that's, you know, one of the things that you may have to consider. And what about my subscriptions? Go through your subscriptions. I mean, we've done this process of going through subscriptions and going, what the hell's that? What are we even spending that money for? So, I mean, we don't want to be cutting muscle at the moment, but we do need to cut fat. Supplier discounts. Can we renegotiate with suppliers? Okay, that's coming. I don't know if that's there yet in this industry, but that will be coming. What about if I rent premises? Can I get a rent abatement? Can I talk to my landlord? What about discounts? Can I relinquish any leases? Are leases up? Do I have personal guarantees on leases, etc.? So those are the sorts of things that you really need to be looking at with expenses. And back to, cash is king. So what about government stimulus? What am I entitled to? What about the JobKeeper, the PAYGW, the apprenticeship scheme? Can I get a new loan? There's a state government loan at the moment of up to 50% of your wages with no interest or no repayments for the first year, and then only 2.5%. So very fixed. What about grants? Are there grants out there with government? Bank loans? Can I draw down on overdrafts, personal loans, defer bank loans, asset loans, etc.? And can I defer? Should I defer to the ATO payments? Now, the ATO payments deferral, I've suggested to almost all of my clients to defer, even if you're not thinking that you're going to have a problem. Just put it in another bank account. Or you're not going to have a major problem, I should say. Put it in another bank account. You have to give it back to the bank. The tax office fine. Do that at a later date. If you never have to use it, happy days. And then reduce whatever personal commitments you've got. Look at your own personal situation. What can I reduce? I mean, most of us have had a significant reduction in our personal expenditure just by the mere fact that we're stuck at home. But what else can I do to reduce those expenses? So cash is king, which is what we said last week. So just moving on to the... So yeah, I think that theme you probably have already. Maybe there's some more ideas there. Hopefully that will give you some other ways of going about this. Just to move on to the stimulus, and Josh is going to come on to this. I might just quickly talk to it, and I think there's quite a few questions coming up as well. And so some interesting things have starting to come out. The cash boost we talked about last week, and hopefully most people got their heads around this right now. This is the withholding taxes from your staff. You can get up to 100%, maximum 100,000 over a 8-month period, and a minimum of 20K. It's busted into two. Again, most people should have their heads around that by now. The JobKeeper is the big one. There's no legislation on the JobKeeper at the moment. Parliament is being recalled to sit on Wednesday, and so we will have some very, very firm details of this by Wednesday. But right now, there's a million questions and not that many answers. Treasury has released some notes, and biz.gov has released some notes, and so we're sort of guessing a little bit, but I think the flavour's there, but some of the really, really granular questions are quite difficult to answer at the moment. But basically, you get $1,500 per employee per fortnight, as long as you've had a 30% reduction in income. There is a lot of questions about how that 30% is measured, and they have given some guidance. The employer is to administer that, and also and it'll be paid in the first week of May, is what we've been told. So it starts on the 30th of March. It continues for 6 months, and the first payment will be in the first week of March, and then presumably every month thereafter in the first week of the following month.
Yeah, and it follows the concept that the government are paying JobKeeper in arrears. So you essentially need to carry it for a month, and then they basically back pay for that month, and so on. That's why it's commencing first week of May, is the concept.
Yeah. Now, look, one of the interesting things that a lot of owners of businesses will be asking is, we know that they've said that it's going to apply to sole traders. So a lot of people are asking, well, what about partnerships, companies, trusts? Well, the Treasury was silent on this. However, biz.gov had published some stuff, and they've said that partners in partnerships, one of the partners can be nominated to receive the $750 a week. Directors, where there's dividends, they're not salaried employees of the business, and there's lots and lots of examples of that, then one director can be nominated to receive it. And then trusts, one individual beneficiary can also be nominated to receive it. So it appears that small business owners will be entitled to this themselves if they're not employees and they've had a 30% drop, which is really good news for everybody. The legislation is, as I said, not out until next week, so we won't know for certain that that's going to be the case, but certainly the government has published something on their main biz website and indicated that this is what they're going to do. So that's really good news for everyone, because I know there's a lot of people quite concerned.
Yeah, we would expect that would be the case, because the spirit of JobKeeper isn't to exclude particular segments. So they do need to think about actually how everyone would access that.
Yeah, now there is some quite bizarre outcomes here, by the way, and in terms of particularly around casual employees only earning very small amounts of money, being only 16 years old and all of a sudden being entitled to $7.50 a week. But I guess the government just have to throw a blanket over the thing, and if there's some bizarre outcomes, so be it. Particularly because they're doing this thing on the fly. I'll just quickly run through these as well, and then we might come back to some questions, because I think the main thing that people are probably interested in the moment is the JobKeeper. Payroll tax, not a lot of plumbing businesses have to pay this, but if you did, you'll get a refund in the next 3 months' way. Those government grants, the government loans up to $250K, if you go on to the state government website, it's QReader, it's qrida.qld.gov.au, QReader, yeah. Okay, cool. If you go onto that, you'll see that the state government is offering loans up to $250K, and it's based on your wage bill for FY 2019, so year ended 30 June 19. It's based on that. You can get up to 50% of that, maximum $250. No repayments, no interest first year, and then interest reverts to 2.5%. I think you get 1 year at 2.5, and then you will get it's payable 2.5% over 10 years. So have a look at that, bearing in mind, of course, that whatever you get, you're going to have to pay it back. So just be careful.
Yeah. And there are limited funds as well. Queensland don't have a never-ending sort of supply of money for those loans as well.
Yeah, that's been capped at 500 million. They may or may not come out and throw more at it. Who knows? But they have capped it at 500 million.
Yeah, at this point.
Which in the overall scheme of things is not a lot of money. There's a government guarantee loan support via the banks, 50%. It's unsecured, but the government will guarantee or secure 50% of it up to 250. Loan terms 3 years, no repayments for 6 months.
Yep.
That's not a great one, and there is going to be a lot of bank security. I heard the bank scrutiny on that one is fairly heavy.
Yeah, and being an unsecured debt, what's not so obvious is the rate might not be as attractive. You could be, because it's unsecured, you could be seeing some higher unsecured rates that you wouldn't necessarily be looking for as well. So you need to be mindful of that.
Very mindful. I mean, I'm thinking you'll see 10 or above %. So it's not going to be cheap money. I'm not loving that one.
That's a last resort in my view on that one.
Absolutely. There's early access to super. If you clunk down 20% as an employee on hours, or 20% as revenue as income as a self-employed person, you can get 10K this side of 30 June and 10 the other. There's an instant asset write-off. It's pretty hard to get excited about that right now. I'm not certain many businesses will be going out dropping big licks of money on assets at the moment. But anyway, it's there, it's available. It's been increased from 30 to 150 before 30 June 2020 just coming. Presumably it will revert back to 30 or continue on. Who knows? We'll find out. But it's difficult to get excited about those two there. Wage subsidies for apprentices, that we all should know about that by now. That's 21K over 9 months to 30 September. And there's income support payments as well, which has been doubled with a Cornah supplement. There's no asset test, and the increased income threshold is approximately 80K. So that's all been extended as well. There's no wait times; you can go straight and get it. Just couple of quick questions. Other things to remind you about as well is. There's bank assistance packages. The Banking Association's come out and said banks are happy to assist for the next 6 months. There's a moratorium on evictions. Landlords cannot evict for 6 months. ATO has been particularly very, very cooperative at the moment, of course, as you'd expect. and a couple of other little things, if this is, which may or may not be of interest to others, is there is there is some legislation being passed to say that you can trade in whilst insolvent. You can't be recklessly incurring credit or anything like that, but they've just removed some of those concerns that many people would have now about insolvency. There's also there's a 6-month notice period for statutory demand, so you cannot go. Somebody can't tip you into liquidation at the moment. Previously, you would give somebody a stat demand, 21 days, and then you could apply for them to be liquidated. Same with bankruptcy. Both of those have been pushed out to 6 months. So people that are in trouble can't be put into liquidation or bankruptcy. And the bankruptcy threshold's gone from 2 to 20K as well. So even after that 6 months, you can't be bankrupted for less than 20K. So those are the sorts of government things that are around, and those are the sorts of things that we're suggesting that you do for your business. Flex your budget, have a look at your budget, see what a scenario looks like at reductions of 10, 20, 30, 50, 60, 70%. Do those scenarios and see what you end up with. And of course, stay tuned for the job keeper, because that's going to be a significant help for a lot of people, particularly those businesses that are limping along and need that support, $750 per person per week. And if you're limping along, that could potentially be the one that gets you to the other side. So stay tuned for next week. What questions have we got there, Summer?
Yeah, we've got a few. I might just bring everybody up, if that's okay. Might make things a bit easier. And then I can just read out the questions. So there are a couple that, Penny will be able to answer. There are, as you said, a lot about the JobKeeper. I might just go to Penny first, just from Donna. Any discussion with Fair Work to reduce apprentice hours?
Yes, thanks, Donna. Yes, so we've been in contact with our counterparts with Master Plumbers Australia, specifically been working with Master Plumbers WA in Victoria as well. And so we've compiled a variation to the Plumbing and Fire Sprinklers Awards to vary the term due to COVID-19. And it basically covers the following areas. So vary the hours of full-time employees, including apprentices, to part-time hours no less than 15.2 hours, because that's the feedback that we've been getting from members, is they'd like to be able to keep their apprentices on, but they don't have the ability to move them to part-time, so that will allow that. Allow annual leave to be taken at double time for the first half hour of the pay, and implement a close down period similar to what we have in terms of the Christmas closure as well. So we're just tidying up the document at the moment, and we'll be submitting that through today. And then we can keep everybody updated with the process from there.
Cool. And then, we might get into a couple of questions for the JobKeeper. So obviously some of them we're not going to be able to answer right now just because we don't know, but I'll put them out there anyway. So Jason asked, is the JobKeeper stimulus available down the track, e.g. if our revenue is not dropping right now, but does in, say, June or July, how far into the future is it going to be available?
I might give that a crack, Josh, and you jump in there, but it appears that the short answer to that question is yes. And also there's the fact sheet coming out of Treasury is suggesting that it's an estimate. So you're actually just looking at what you think might happen, and based on that, you can claim it. So if you think you're going to drop by 30%, and you've been your thinking is based on a reasonable assumptions, there's going to be some leeway from the Commissioner of Taxation to say, well, if you didn't clunk down to a full 30, you might go 20 or 25. From what we're seeing, there's going to be discretion on the Commissioner's side to say, well, that's fine. So the short answer is you don't have to have seen that 30% in order for you to claim it, is the first thing. But you've got to have a reasonable belief based on certain assumptions that you will drop 30%. The second thing is, if, say, for example, in April, you're of the view that you're not going to drop 30%, but maybe it might happen in May. Well, our understanding at this stage, which is quite early, is that'll be possible for you to then jump in at that point.
Yeah, the commissioner is going to have to be given power under the legislation to have some flexibility on not just applying a straight what does March quarter look like versus last quarter, because that could possibly cut a lot of people out of the eligibility. So they're going to have to build some other mechanisms into it to allow. And they do say in the fact sheet that, look, if a business has in good faith estimated that the June quarter is going to be down by 30%, then look, they're not going to look too heavily upon that if you get that slightly off.
Yeah, and I think the other thing there is too is there's lots and lots of little scenarios. So, for example, you may have been a startup, or you might have only been in your second or third or fourth year of business, and so you're on that trajectory. So you're comparing this quarter this year to the same quarter last year. Not only would you have to drop 30%, but you've got to drop the growth. So you might have to drop 50, 60, 70% to be entitled to it if you were just looking at those quarters side by side. So obviously that's a scenario that the government don't want to see, and they've touched on that in the fact sheets as well. So that's going to be in the legislation as well, where startups, new businesses, etc., or businesses that acquired other businesses. So you might have acquired a business from some recently 6 months ago and added it to your own income. So for you to drop, you can for the same period last year, you might have to drop more than 50%. Well, that's those sorts of scenarios are going to be covered in the legislation, so that people not entitled to it just because of that.
Yeah, Ben actually asked that almost exact question. So they're a new business. They started in December. So yeah, asking how they show a decrease in turnover. He did also ask...
You'll be right, Ben. They've made it pretty clear that people like that will be fine.
Yeah. So he also said that there are 3 directors of the business. The second and third directors were to start getting paid from May 1. It does not seem that this will be possible through the business now. Do you think they would be eligible for the $1,500 per month from May 1?
Well, unfortunately, from what we've seen so far, which is very, very limited, it's literally a couple of lines. It appears not, where you have 3 directors, and they're not on the payroll, then it appears not.
Yeah, and 1 March. If they weren't employed at 1 March, it appears that that's their line in the sand date they're using.
1 will be able to get it, but not all 3.
Yeah.
And I think you might have kind of already answered this, but Donna asked, do you have to show P&L for every month for the JobKeeper? Do you think they're going to ask that of the businesses?
No, I don't think so. I think it's going to be based on your activity statement. If you are one of those people that are self-employed, either with a partner, a company or a trust, then they're going to need you to report monthly, from what we understand. But if you're not one of those, our understanding is it's going to come off your activity statement.
Yeah, and the OTO now have single touch payroll, which probably nearly every business is using. And so they will be referencing single touch STP for the reporting of that data. That's what they're referencing to, as well as cross-check eligible employees. So they want to start using that system rather than create a new one.
And sorry, Melissa just asked for clarification on one of the things you said earlier with the JobKeeper. Did you say director employees are or are not entitled to the payment?
The director employees are definitely entitled to it, but we're also referring to, so where they're on the payroll as at the 1st of March, they are definitely entitled to it. There's one step further, where there's a lot of businesses where the directors aren't on the payroll, and it appears that they are entitled to it as well, but only one director. So I hope that answers that question, Sam.
And Alison had a question about, so they've got 2 sections to their business. They've got plumbing and roofing. The roofing hasn't reduced yet, but the plumbing has. If they both run as the same entity, but we have figures for them separately, could we show we have reduced 30% in the plumbing side and be eligible for the payments?
I've not seen anything that would suggest that you could departmentalise and say we have 2 businesses, one running under the one entity and one's dropped, one hasn't. I've not seen anything to suggest that that's going to be possible. And to be honest, I'm struggling to think it will be possible. It will be a consolidated revenue. would be my best guess at this stage. It'll be consolidated revenue.
But Mick, I guess the maths behind that is if the roofing business is just maintaining and the other half of the business is falling, it might trigger the necessary reduction.
Yeah, exactly. You did right there, Amanda. That's right. Depending on how
Correct.
big that business was as a part of the total. Yeah.
Correct.
Cool. Joanne had a question about PAYG. So she said that they lodged their BAS on 1st of April. Do we pay the full amount owing, which includes the PAYG withholding, and then after the 28th of April, the credits are applied? Or do we pay the amount owing less the amount reported for Q2?
I think the message is that lodging it early probably wasn't going to help. Probably needed to wait till the 28th anyway, because as far as we understand, the 28th is going to be the point where the ATO system actually does start auto-applying the credits. So at this point, until we see exactly how the mechanics and the ATO are going to roll it out, I would actually wait until you get to the due date for the actual payment.
So that's the point. That's the point, Josh. The payment's not due until the 28th of April. So despite the early lodgement, there is no need to pay today.
That's right. I wouldn't go ahead and pay the whole amount until the 28th, when I expect the automatic credit will apply. Thanks, Amanda.
She just said that Joanne also said that she spoke to the ATO for a lengthy period yesterday and they weren't able to give any advice. She's reading conflicting information on the internet, so hopefully that answers the question.
Yeah, unfortunately, sometimes the ATO and the mechanics, they tend to learn some of the mechanics a bit late in the piece, so we'll have to see how we go.
Melissa had a question about moratorium on eviction. She said, do you guys know what the time frame is?
6 months.
6 months. Cool, nice and easy. I've had a few questions about employees, which I think more to do with paying wages and that kind of thing. So I think there was a couple that, Penny, you might have gotten responses for from our workplace relations team. I think the first one was Clayton's, which is we have an employee who was overseas and is due to finish his 14-day isolation tomorrow. Does he need a doctor's clearance before he comes back to work? Is that the question?
Yeah, sure, yeah. Yeah, that was the question, Summer. So if the employee has been in quarantine for 14 days, they would have had symptoms by now. So if they are feeling well, they are able to return to work without risk to other employees. However, the business should be practicing good hygiene and have policies and procedures in place as well in relation to the social distancing.
Cool. There was also another one which I'm not sure if you'll be able to answer, Penny. It was a private message. It just says, and I think we might have actually answered this in a previous webinar, but what do we do about employees who are pushing us to put them on stand down so they get paid to be at home while we are trying to keep the business going? Once you do it for one or two, all may want to do it. Should we feel pressured to have to do this, even if the employees are mentioning the safety of themselves and their families?
Yeah, I think, Summer, we might just get Kim or Emma to reach out direct to Alison and provide some feedback in relation to that question.
Yeah.
Thank you.
Cool. Ben, who asked the question earlier about having the 3 directors and two of them weren't due to start getting paid until the 1st of May, he just had a follow-up question. He said the $1,500 fortnight payments that requires a downturn in turnover. Some months we have a large amount of labour with minimal materials. Other months we have massive material costs with the same labour costs, which makes our turnover larger. Are we able to show the turnover on labour only, as it is a much more accurate reflection of the way our business is coping?
Good question. And again, we're not going to know the answer to this one anytime soon, other than there will be an application process, I understand, Josh, to the Commissioner for Taxation, where you can say, hey, listen, I don't meet any of these tests, but for these reasons, we think that we should be entitled to the JobKeeper. and he can apply his discretion. That's what we're told. The legislation will tell us more, but that's my understanding at the moment. So it's about putting a good argument to the ATO when the time comes, and so you just need to construct a very, very good argument, put it to them, and I'm sure they're going to be pretty flexible.
And we've got a question from Greg about superannuation. He said, is super access still only for sole traders, not companies?
Is that in terms of the 10,000 early release?
I think so. Yeah. It's not clarified there, but yeah, I'd say so.
It's always applied at an individual level, so it would look to that individual on how they're remunerated, I would expect. So when I sole traders at 20%, or where in another employment arrangements, it's a 20% reduction in hours. So that one's probably a little bit grey in terms of where you don't fit both categories, to be honest.
Yeah, I think you're right there, Josh. I think it's if you're an employee and you could be a self-employed employee, if that makes sense, and you've taken a 20% reduction in hours, then you're entitled to it. And if you're self-employed and you've got a 20% reduction in revenue, you're entitled to it.
Cool. And Jennifer had a question, which I'm pretty sure we actually put into one of our updates the other day. So I'm not sure if, Penny, if you have the info just about apprentices travelling in a vehicle with another employee due to social distancing, which I think...
Yeah, we did put out, I don't think it was I think it was Tuesday, I think it was, we put the information out in our update that we send out every day. My understanding is that you can still have two people travelling together in a vehicle for the purposes of going to and from the job. And I think it was recommendations to not be changing your people in the cars, and obviously having some sort of process to clean the cars after you've actually finished at the end of each day from a hygiene perspective as well.
I think there was also some feedback about keeping the windows down. Yes. Obviously, if it's possible, having one person in the front, one person in the back, obviously in utes, that's not really feasible.
Agreed.
And I think there was also something about the air conditioning, about
keeping not on recirculation, so to speak.
Yeah. So yeah, there was a couple of tips there in that email that went out the other day. Clayton had a question about the loans that you guys mentioned, or that you mentioned, Mick. He just said, what are the guidelines for federal and state 250K loans?
Well, the state loans are going to be administered directly by the state, Queensland State Government, and the guidelines are fairly straightforward. It's 50% of your payroll as at for the year ended 30 June 2019. So you present a set of financial statements. If your payroll was more than 500,000, you're entitled to apply for a maximum of 250,000. There's no interest, no repayments for the first year, and then I think it's 1 year at 2.5% interest, and then it's 10 years at 2.5% principal and interest repayment. So that's about it. The loan is made to the individual, so the individual is personally responsible for that debt. So keep that in mind. Whatever debt you take on, you're going to have to repay. The federal government's completely different. The federal government the federal government's come out and said unsecured loans up to 250K, and will guarantee half of it, so that the banks are then have got to still make a call as to whether or not they're prepared to be responsible for the other half unsecured. And no doubt it'll therefore be very stringent, the tests as to whether or not you're entitled to it, A, and B, the interest rate's likely to be 10% or more, presumably. Every bank will be different. That's about it, isn't it, Josh?
Yeah, that's the crux of it, definitely. It is definitely at the bank's discretion to apply their own. albeit they've been encouraged by the Australian Banking Association to relax their criteria for credit.
Yeah.
But each bank is still going to have their own criteria that they want to tick off before they're willing to do it.
Yeah, the Queensland State Government loans are significantly more attractive.
Yeah.
We've had a couple of questions about the jobs. I think it's the job seeker payment, not the job keeper. Mitch asked, so what if staff are on a salary and their rate/income is reduced by 20%, not their hours? Would it be better to show reduction in hours?
Correct. So some firms, and I just read one this morning, KPMG, massive accounting firm that most people know, have reduced their salaries by 20%, but not the hours. So I don't know how they've done that from the point of view that those people, as my understanding, are not able to access superannuation. But that's what they've done, presumably because the accounting firms are all being smashed for more information and help at the moment. So they've said, listen, we're going to reduce your salaries by 20% to 80%, but we're not going to reduce your hours. So what's more likely or probably more helpful for people that need to access superannuation is you reduce the hours by 20%. Now, if that person then decides to contribute more hours work voluntarily, then I think that's fine.
I think it definitely you need to consider how you look at it from a HR perspective. Are you technically reducing their per hourly rate, or are you just reducing their hours? Now, their salary's probably been based on how much they should be paid on an hourly basis. So it's somewhat of a mathematical sort of concept, depending on how you look at it. If you go, oh no, this person should be paid X amount per hour, well, to by default get their salary to come down by 20%, the hours need to.
I suppose the issue is going to be if the superannuation funds need a formal letter from the employer, and whether or not that letter needs to say that the hours have been reduced as opposed to the salary. So, yeah, I just think we don't.
I think it's the hours, though.
Absolutely, yeah.
Definitely.
But Kim, I'm sure Kim doesn't need any more work at the moment, Penny. But Kim could probably pitch in on that one.
Yeah, sure. She sure can. That's no problem at all.
Yeah.
And just going back to Alison's question before about stand down. So if you do enact the stand down clause, it has to be all employees, not just one employee. So Kim's happy to talk to you direct offline. There's a couple of people that were interested in the answer to that question as well.
Yeah.
Just had a whole lot of questions come through, sorry. Ben had a question about getting a permit to cross the border to carry out work in Tweed. So,
yes, you can go on to the queensland.gov website, and there's a link called Queensland Entry Pass, and you basically just need to fill in the form on there, and then they'll issue it with you. You have to submit the application, and they'll be able to issue it. We sent out the link in our email yesterday. So if you go on there, you'll see Stronger Border Controls. You can just click on that. It'll take you through to the link.
Is that's mainly for people coming into Queensland?
Correct.
Yeah. So if you, does anyone, or do you know what the New South Wales haven't enacted any restrictions like that?
No, they haven't. So I suppose if he's going to Tweed to do work and then obviously got to be able to come back, they're not letting you go through unless you have that pass now.
Gail,
somebody's asked access to can people access their self-managed super if they've got self-managed super for the 10-20k? I'll revert that one to Josh. Josh is the super expert.
Yeah, well, look, the answer is yes, it's super, but the key thing is that it's on the trustees who are operating those self-managed super funds to make the assessment that the person accessing super has actually met that condition of release. And the condition of release, that's actually, this is falling under as a compassionate grounds condition of release. So you do need to be very careful there. It does fall back to the trustees, but we know what the criteria is to be able to access it, and I would expect the ATO are going to issue some forms for trustees to be able to do this. They will have to issue a form, which would step through how and why it's actually available. But the short answer is yes. It's
And Josh,
just like any other super. Yeah.
Oh, sorry, just on that, I'm sure I read something that the ATO was doing exactly what you said, and that the application would have to go via the ATO for self.
Yeah, but it'd have to go through, because the self-managed super, they're going to want to control that a bit more carefully. So the key things is the ATO will have to administer it with a form or some form, but the trustees need to be very aware of their requirements as well.
Don had a question. I'm not sure. Hopefully, you guys understand it. It just says, "Can you remove overward payments to help?"
I've seen a couple of contracts recently come through for staff members who were paid above award to compensate them for additional weekly hours, which were included as reasonable weekly hours. So I actually think they would need to go back to their professional organisation and get advice. The two contracts I've seen were drawn up by, I think one was by Master Builders. They gave the advice. So I just think that people would really need to get some advice in relation to that, and not necessarily automatically remove those over award payments.
Yeah, and if you talk to Kim or Emma in our office, they'll be able to provide you with the answer for that question.
Yeah.
Yeah, there's been a couple more questions about the Centrelink payments, the $550 per fortnight that's being offered to people out of work. Debbie said that they have a casual employee who has been with us for 7 months. There is contradicting information regarding whether he can access the coronavirus supplement of $550 per fortnight should he lose hours of work, but he does not get any benefits currently. Do you guys have any info on that?
The social security thing gets a bit tricky because each case is slightly different. It'll depend on whether there's a partner involved or not as well. So the key thing is to look at the 550 supplement. Is you need to look at the job seeker eligibility at a base level first. Are you even eligible for job seeker at its very base level? And that's very much individual based. But they have, the key thing is it's not asset. They've relaxed it, so it's not asset tested at the moment. Waiting periods are waived. It is still income tested, but they've just lifted the income testing up so that it allows more people to access it. So probably can't give a direct answer on it at this stage because it is very much
highly probable, I think, is the answer. The fact that the person was casual is really not relevant to the question. Yeah. Whether they were casual or perm, or that's not really relevant. They're entitled to the job seeker. They'll be entitled to the coronavirus
supplement. Correct.
So I think the short answer to the question is it's highly probable.
Yeah.
Cool. Yeah, I think that's most of the questions.
I've got the answer to Ben's question there. So Ben asked, with the stand down of all plumbers, one of the plumbers is designated to a particular site on a full-time basis. Does he still need to be stood down if the site has that he is the plumber they want on full-time? This plumber does not work on any other sites. So in that instance, the plumber working on a dedicated site would be classed as one work division, and he could remain on site when all other plumbers for that company could be stood down or have been stood down.
With a lot of those stand down questions, because in our last webinar, we covered that with Kim and Emma from our workplace relations team, and the main advice that they had for people before standing down anybody was to reach out to one of them and discuss it with them, because every business is going to be different. And the clause has to be enacted correctly in order for it to hold up. So
Yeah, and we have a deed that members can utilise to issue to their staff throughout this process. But it's best, we don't have it up on the website. We've got it so that when you call, if you want to do it, we can make sure you're following the right processes and procedures. And just on Robert's question, he asked about, to clarify, I have a tradesperson who is a high-risk person and they have a rare medical condition. And if he agrees, are we able to stand him down only and not the other tradies? So Kim would like to talk to Robert direct about the employee's condition, as she's talked to a number of members specifically around different medical conditions. So I think it's best that she speaks to you direct on that one, Robert.
Cool. All right. I think that might be all the questions that we have. So there was a few questions about the online course, which I'm just going to put back up in the chat just while I'm talking. If anyone has any more questions, keep typing them. And yeah, but otherwise, I just wanted to say thank you to everybody. So thank you, Mick, Josh, Amanda from Xact Accounting, and thank you to Penny for joining us today and giving us your insights.
Summer, hey, thanks very much, Summer, for putting all this together so quickly. You guys have been moving very, very fast with lots of information under a lot of pressure. We just also wanted to let members know that we're happy to take a 20, 30-minute phone call for members. They just need to state their member number, and there'll be no charge, just to give them, if they've got a couple of quick questions for us, or they want just a little health check to make sure that they're doing all the right things financially. We're happy to take those calls as well.
Awesome. And we'll put the contact details for Xact Accounting in the follow-up email that we send out, so keep an eye out for that. But yeah, before we do go, I just wanted to bring up a couple of other things that we're working on at the moment. So just up on the screen there, I've got the Facebook group that we just launched yesterday or the day before, I think. So it's only open to members, but you can join that. We're putting updates in there. You can also just obviously chat to everybody else. We do also have one webinar planned for next week on Tuesday with Busy at Work, just to get their perspective on apprentices. Basically, at this time, obviously they just started taking the applications for the apprentice wage subsidy as of yesterday, so it'll be good to speak with them as an apprenticeship support network provider. So we'll open registration for that later today. But yeah, that's about it from us, I think. So thank you, everyone. Thank you for watching, and I hope you all have a good day.
Yeah, thank you so much to Summer and Mick and the whole team at Xact. And also, if any members would like us to be doing other topics for webinars, please reach out and let us know. I think someone was keen to have one around contracts and debt collection as well, so we're happy to look into that. But if anyone has any other ideas for topics or suggestions, please let us know, and we'll look at hosting those for you. If you have any workplace relations questions, please contact Kim or Emma at the office, and they'll be able to assist you throughout this process, because we understand it is a difficult time. This is a great opportunity to utilise your membership. I know Mick talked about subscriptions, but definitely don't want to be getting a membership subscription at this time, because we're here to help you and support you through this process. So anything you need, please reach out. Have a good Friday, everyone, and thank you again for your support.
Thank you.
Thank you.
Bye.
Thanks, everyone.